Hey everybody, Jay here. Welcome to the channel. Johnson & Johnson reported earnings yesterday, so I wanted to do a quick video top lining my key takeaways. I had 5 key takeaways from their earnings report after listening to their earnings call last night. So a quick level set, why I care about Johnson & Johnson. You can see here on my list, they are my number 12 holding overall. There they are, right now at number 12 on the list. I own 186 shares, a little over $27,500, and they, at the current rate, produce a little over $700 in annual dividends for me. So coming out of the earnings call, I had 5 key takeaways for me, and it was interesting because if you look at the headlines, you see this here, Johnson & Johnson's fourth quarter results leave Wall Street with mixed emotions. And the reason is, while they did slightly beat on overall earnings, they had a slight miss on revenue. And so I think the street might have dinged them a little bit for missing a bit on their guidance. And their stock has actually dropped a little bit the last couple days. Honestly, for me, that doesn't concern me at all. I think when you watch immediate reactions, unless there's something really fundamentally concerning about the business, like Boeing, or if you see some really significant headwinds, like the Wells Fargo earnings perked my ears a little bit, even though I haven't sold that stock. This Johnson & Johnson earnings report didn't faze me one bit. And in fact, after listening to the earnings call last night, I left with a higher degree of confidence in that holding. Let's jump in real quick. So my key takeaways, number one, and the biggest thing I pull out of this is that they're diversified. It's pretty amazing. This is how their revenue broke down for Q4. They have 3 primary segments. They incur about a little over half of their revenue in pharmaceuticals, a little under 1/3 of their revenue in medical devices, and then 17% in consumer products like Tylenol, Benadryl, Neutrogena, etc., that kind of stuff. And this is Q4 revenue numbers, by the way, not annual numbers. And again, I have this in the disclaimer up front, but don't take any of my numbers as gospel. I'm literally just doing these videos for entertainment purposes. And overall, with their diversification, they talked about the fact they have 26 different platforms, whether you want to call them products, brands, whatever, that each produce over $1 billion in annual revenue. They produced over $82 billion in revenue last year, and they have 26 products that each produce over $1 billion. That's amazing. That's an amazing amount of diversification. And that means, if 1 or 2 of these products are if they lose a patent on a drug, or if something, unfortunate happens with one of their pharma products or devices, etc., they have a large bench of revenue producing platforms to pick up the slack. The next thing that I picked up is the fact that they're innovating. When you think of innovation companies, Johnson & Johnson isn't one of the first that comes to mind. But if you take a look here, they talked a lot about the fact that, and here, let me move this down here so you can see the headline. They talked a lot about robotic surgery, and robotic surgery devices are one of their big plays in terms of future revenue and innovation. So that was something that was a bit eye-opening for me. That was really exciting. Number 3, they're very confident in pharma. They tell the street pretty consistently that they're going to outperform the category. I think they were saying by 3%. So that's something, when a company is telling the street they're going to outperform, that's a pretty big deal. Because I know that, while most companies don't like to sandbag on guidance, they also don't like to overpromise, because they get penalized pretty aggressively by the street if they don't meet guidance that they put out there. So to me, that was just something that I noted, that they're very confident in pharma. They talk a lot about outproducing the market in pharma. So I'm going to really keep my eye on them when it comes to pharma moving forward. Number 4 is they have a strong moat. If you sit back and you think about this, the fact that they're in a category that's so reliant on innovation and R&D and producing new products and introducing new products to the market, that's a pretty significant barrier to entry for other businesses. And then when the smaller businesses do start to gain some traction, they become buyout candidates for Johnson and Johnson. I think Johnson and Johnson does a fair amount of R&D internally, but they also buy companies. And so that, to me, the amount of capital they have to work with in the space and the amount of experience that they have in the space is a really significant moat. And then the other thing, and this isn't as positive, but I think the fact that this is such a litigious industry also provides them with a pretty significant moat, because while it's clearly unfortunate when people have issue with their products, when people have issue with any sort of medical or health type products, there is a large amount of litigation in this industry. And I think the fact that Johnson & Johnson, A, has such deep pockets and such a strong bench of lawyers to deal with this litigation, but then B, they just have a lot of experience with it. And so I think between the innovation, the deep pockets, and the litigation, that indicates a pretty significant moat for Johnson & Johnson in the category. And then the fifth thing I took away, and this was really interesting, for Johnson & Johnson, when they do share buybacks, it's a big deal, because if you think about it, when they have some free cash to spend, there are a lot of places they could put that. They get a significant ROI on R&D, research and development. So, they can put $1 into research and development. They obviously need to set a significant amount of money aside for litigation. They can get a strong ROI when they purchase the right company. So when Johnson & Johnson decides to buy back some of their shares, what that tells me is they're seeing pretty significant value in their shares. And I guess for me, selfishly, for me personally, that makes me feel good, because if you look back at their numbers, let's go here to key data. And then if you go to the cash flow and take a look at how they've managed buybacks over the past few years, bear with me as I come down here. Look here, repurchase a common stock. Look at this. In 2019, they almost doubled what they spent in the previous year on their stock in terms of share repurchases. So that to me tells me that they saw significant value in their stock last year, which makes sense, because if you go to the overall chart for Johnson & Johnson, they appeared to be trading at a bit of a value last year. You can kind of see, and they kind of had this dip throughout the year. And while I don't know specifically when they were buying these shares, they were repurchasing these shares, I would be willing to bet they were doing a lot of it during this tranche. In conclusion, I walked away from the Johnson & Johnson earnings report with a high degree of confidence. It was a very boring earnings report. If you haven't listened to a C-level executive list through a number of different drugs and medical devices and talk about the percentage gains or changes in revenue, then you haven't listened to a boring earnings call before. But what I can tell you is I like the boredom, because I have enough excitement in my portfolio with Amazon, Facebook, Google, Zoom, a lot of these tech stocks. And then B, when Johnson & Johnson is in the headlines, it usually isn't a good thing. So J&J, give me more boring earnings reports in the future. Thanks so much for watching the video, guys. If you haven't yet, feel free to subscribe and hit that bell, and you'll get notified every time I drop another video to the community. Thanks so much. Have a wonderful day. Bye-bye.